All right, so here's something that I'm pretty passionate about is just building wealth through real estate. And it's really a beginner's guide. I have a full book on this. If you want to copy that, shoot me a message. Happy to send a link or get you a copy of that. But really, here's my background before you start. Just 22 years in this industry, been with American Pacific Mortgage since 2010. Um, Really, I'm passionate about helping people develop wealth in real estate or help give pointers on budgeting and just really kind of peace of mind on how to develop a good investment portfolio. And I do all I can through what we do in our industry and share my own story and how I've developed wealth in real estate in the rental properties that I currently oversee and hold. So with that, let's look at American Pacific Mortgage, where I work, right? We could work in-house with our bank, if you will. We have 27 investors that we could work with for various loan products, but we can also broker. So there's a lot of options here. And really, our thought is we want to create experiences that matter, and your success is our success. So we want you to win. When you win, we win. And we want to just kind of guide you through that. So here's our agenda. Why real estate investing, investment, property types and strategies, financing your first investment, numbers that matter, finding a good deal, managing the property, common mistakes to avoid, and of course, ready to start investing, right? Those next steps. We'll do Q&A at the end. I'm recording this, so we'll do Q&A after I stop the recording. But if you do catch this recording, feel free to simply send me a message. I'm here to help, right? I want to guide you. So yeah, definitely things that we're here to do. Let's start with this. Okay. Why real estate investing? Well, unlike stocks, real estate offers tangible value, multiple income streams, tax benefits, plus you don't need to be wealthy to get started. Really, it's kind of you can create passive income through rental cash flow. It appreciates over time, right? There's all these things. And the big one that I like is you can hedge against inflation and have a whole different kind of breakdown and presentation on inflation. If you're curious about that, happy to send that to you as well. But now let's look at investment property types and strategies, right? So you could do the buy and hold thing, which is you buy the property long term, hold it, rent it out. I've done that. That's personally what I do. I currently have 9 properties, 10 doors that I rent and I hold, and they're essentially cash flow models, if you will. Short-term rentals like Airbnb, vacation homes, VRBO, vacation rental by owner is, another option that you could do. And what I usually tell people, and we'll get into this, but be careful there. We want to make sure that you stay within the city and county ordinances of whether they're allowed or not, and if there is more allowable certificates for that, if certificates are actually required to actually get a VRBO. There's fix and flip, where you could buy a property, renovate it, and sell it quickly. House hacking, where you could buy a 2 to 4 unit property, purchase to live in one of those units, rent out the adjacent properties, or the BRRRR strategy, right? Buy, rent, rehab, refinance, repeat. And you can do it over and over and over again. Each category has its pros and cons, as I said earlier on, right? So the key is to pick one and focus on it. Make that your thing. All right. So financing your first investment. Conventional loans are for investment properties is an option. You could do debt service ratio loans, which is essentially based on the income of the property itself. You'd put 20% down or as low as 15% down. You do that. There are bank statement and asset based loans that you could look at, or if you own property and you want to find a way to create a down payment, you could do a home equity line of credit or cash or refinance from your current home for that ability. And depending on where you're buying too, I mean, if you have a good amount of equity in that particular property, you could actually use that equity itself and purchase the property using the home equity line of credit or cash or refinance. So, of course, there are partnerships or joint ventures that are available. So, the point here is don't let the myth of needing 20% down hold you back. There are creative ways to fund your first property. So, feel free to reach out to me to find out what those look like, and definitely happy to talk about those options with you. Numbers that matter. So this is what I recommend everybody do. Crunch the numbers before you buy. You want to find out the monthly cash flow, which is rent versus expenses, cap rate, net operating income versus the value of the property, the ROI. What's your return of investment, meaning your profitability upon the investment, vacancy rate, repairs, management fees, insurance. All these things are huge, but this is where many beginner investors go wrong. A good deal on paper doesn't always mean positive cash flow. Know your numbers. It's important to do due diligence here, and I could help with that, right? So finding a good deal. You want to work with investor-friendly real estate agents. We have quite a few that we could refer to you. So if you're looking in a certain market, let me know. We're happy to make that connection. Look for undervalued properties or motivated sellers. Use tools like Rentometer, Zillow, Redfin, Roofstock. There's a lot of various products that'll actually show you cap rates. There's downloadable forms. I have them as well if you want to figure out what your actual cap rate is or rental and just do analysis on a property. I have spreadsheets upon spreadsheets. Happy to help and send this to you. So I would recommend though, analyzing 10 or more deals before you make your first offer, right? Here's an idea here too, is start local. I did. I was in the Bay Area and I bought my first several rental properties in the Bay Area in my own city. I was in Petaluma at the time, right? And we had done that and it was easier to manage. Now I have properties in several states. However, I started local. I think that's wise to do if you could do that. So managing the property. Now you're a landlord. Now what? So you could do it yourself or hire a property manager. You need to screen tenants, setting the right rent, maintenance and repairs, tracking income and expenses for tax season. These are all things that I think where the real work obviously begins. I have a property manager for my properties. I, run my branch for my mortgage company with my team. I have a wife and two toddlers, one on the way when I'm recording this. So, mind you, it's 2025, but I have three small children. I'm involved with my church and my community. It's hard for me to manage the property on top of all of those things. So I actually find benefit in property management. And I have great referrals for you if you're looking for a solid property manager after you acquire the property. They will help screen the tenants. You want to make sure you do a proper credit check. You do the background. You kind of check their references. You want to make sure that your rent is right for the area. You want to stay fair market value, right? You want to stay fair to the rental cost of that particular property. And then, of course, factor in maintenance and repairs. They come up. Trust me, they come up. And you want to make sure that you have, a set fund set aside for that as well. I usually say at least 10% of what you acquired the property for. And it could be less, sure, but expenses do come up. So being mindful of that is incredibly important. And then, of course, you want to track the income expenses for tax season. Something I do on my properties is I track it every single month. Every little dollar that is spent, even if it's sending a handyman to the property to unclog a toilet, that's in there. And it's something that I want to make sure is in there every single time. So when tax season comes, you have a spreadsheet ready to go for your CPA. If you want help in building something like that or a copy of that, let me know. I'm happy to send that as well. Again, spreadsheets upon spreadsheets. I have them ready for you. All right. So common mistakes to avoid. Underestimating cost, over leveraging. You never want to move too quick. That's a big thing. Like, well, I bought this one, buy this one, buy this one. Make sure you do the right due diligence. Make sure you get inspections. Make sure you know that property. It's okay not to buy the property. So you want to make sure that you obviously look at that, right? You don't want to over leverage or move too quickly because, of course, there are expenses that come up with holding property. So you don't want to ignore the location. You want to be mindful of the location. You don't want to skip inspections, and you want to make sure that you do your due diligence with tenants. So if you're ready to start investing, check your finances and credit. Connect with us. I'm the mortgage guy. I can help with that. I'd love to kind of break down numbers with you. I would advise you to be connected with an agent. We'll make that connection for you. Start tracking local listings or in the market that you're looking at. Join investor groups or forums. Learn, right? There's a lot of communities out there that help with that. Schedule a consultation. So we'd like to do this earlier, but really we want to go over your plan. We go over your budget. I have budget booklets. I even have a full presentation on budgeting as well. Want to make sure that we are mindful of that to help guide you in that. And remember, you don't have to do this alone. We're here to help you. Analyze the deals, run the numbers, and figure out what is the best financing for your goals. At the end of the day, we want you to win and we want to help you. So any questions on any of this? As it says, stay connected. You can call, text, email me, visit me on social at mike.belfor. And yeah, really looking forward to helping you. And even if it's a question, even if it's not now, if you're 2 years out, I want to help you. I want to get you there. So we're going to do all we can to do that. Any questions come up, I'm a resource. Call, text, email anytime. Have a blessed day.